All right, now to our first conversation. We see microfinance institutions as MFIs play a pivotal role in empowering Nigeria's vast informal sector, which according to some estimates contributes up to 65% of GDP and employs over 80% of the workforce by offering collateral-free credit, flexible repayment plans, and tailored financial tools. MFIs bridge the gap left by traditional banks, particularly for women entrepreneurs and small informal businesses. Well, joining us to unpack the industry now is Ashay Ashagu, is the CEO, Entourage Integrated Trust Limited, and also a finance expert. Joining me right here in the studio. It's great to have you. Good morning.
Thank you. Nice to be here. Thank you
it's
so
great
much.
to have you. So, at the end of the day, we know private sector, at this point, looking for credit and affordable credit, for that matter. We see the CBN is trying to battle sky high, inflation. We've seen interest rates stay elevated. So definitely that makes it quite difficult to get affordable credit, in this kind of economy. But before we go into that, geopolitics is on the front burner right now. We're seeing what's playing out in the Middle East. And I don't know if you've seen any risks for your sector with what's playing out so far.
Yeah, I mean, I would look at, let's even start from the commodities, people who actually will sell goods and services. Prices will start going up. A little bit of inflation, and then that might drive up lending rates at the moment. So I think that's the reason that's going to be prevalent.
Right, and definitely, I know businesses don't want to hear that.
Yeah, we don't want to. We certainly don't want to.
At this point, because we're already hearing calls for interest rates to be reduced. At this time.
But most likely, this war and what's going on will probably jack up interest rate.
Right.
At the moment.
Right,
so,
and definitely, because it's a no-brainer at this point. We're already seeing what's playing out with oil prices. Oil prices going up.
Oil prices will certainly
That's
go up.
a risk for inflation.
I think Dangote just announced some jack up in their prices, and so that's what we'll start seeing. As soon as, if this war goes on more than this, then price of services, commodities, and importation, everything's going to go up. So we just have to pray that this...
Right, I already saw some concerns this morning, talks about fuel prices, the risk of fuel prices even going higher at this point. We know how much of a driver of inflation, that is. But let's come down to the MFIs, at this point. Talk to me about what you're seeing when it comes to the MFI's position in funding the informal sector. Are you seeing any improvement, so far?
I wouldn't say I'm seeing improvements because, one, we need to look at the statistics to start with. These informal sectors account for more than 50% of our GDP. And we're talking about a sector that provides more than 84% of the workforce. And we have over 40 million of these informal businesses. But guess what? Only about 4% of this sector, of these informal businesses, are able to even access funding from banks. This is what you call grossly underserved. These people are they are basically the one carrying the economy, but we don't provide funding for them. So I don't think MFIs are doing so much. But what is the role of MFI in all this? MFIs are supposed to provide basic funding, bridge financial gap, help with economic mobility, from one stratum to the other, from micro to small, and to medium. But at this rate, what we're seeing is microfinance institutions behaving like banks themselves because they do not understand the kind of structure, the accountability structure that these informal sectors have. They're looking at them like they should be acting like large corporations, they should have financials, they should have collaterals. They don't have it. So how do you attend to these people without unnecessarily giving them the burden of go look for collateral, go get the kind of things you will ask, requirements you ask from large corporations to be able to avail them credit. So we are saying that microfinance should understand the accountability structure, which is essentially trust-based. They don't understand it. I don't have boots on ground. We still don't have boots on ground.
But how hard is it to, get trust, when it comes to, the MFIs and the informal sector? Because, being informal almost makes it, seem hard, to get data on, such businesses.
So I'll tell you something. At the micro level, you find out that if you have two people who sell, one sells okra, the other one sells beans. They've been in that same Oshodi market, for example, for 20 years. So you just need to understand that they relate based on trust. Have you ever been to any, to buy goods from one of our Igbo brothers? If they don't have that good you want at that moment, they will run quickly to one of their neighbors and they say, oh, Chinedu, quickly give me this good. I have a customer.
Oh, yeah, they do that a lot. Yeah.
Right. So when they don't have to start signing documents or saying, okay, you need, that's more like you're giving the person credit. They don't get to sign for anything. They get those goods. And when they attend to their customer, they sell, they make a sale, they go back, and of course, they sort themselves out. So we're saying that the kind of requirements that we should be looking at for funding should be trust-based, in the sense that they should be able to guarantee one another to say, okay, I know Chinedu. He's been here for 20 years. He's going to come back here tomorrow. I know Mama Tawa, for example. She's going to come back here tomorrow. Okay? They've been there for a long time, and they need to, microfinance institutions need to understand how this works. Because if you're waiting for Chinedu to give you collateral, or you're telling him to come do some form of savings before he's able to get funding, then you're asking for too much. He doesn't even have the inventory in the first place. That's why he's coming to want to obtain some credit to either scale or improve on his inventory.
All right, and you did mention the okra seller and most of the food sellers.
These are the micro guys.
The micro guys.
So they are the ones that carry this economy.
Exactly, and definitely we're dealing with elevated prices of almost everything. At this point, we're hearing people having to buy a bunch of plantain for about 5,000 naira, which I remember at some point it was like 800 naira to get that. So we're seeing food inflation at its peak. If the MFIs play that role well that you talk about, do you think that could help in bringing down food prices?
Certainly, because you will also look at the interest rate. When microfinance institutions don't play their part, you will see these informal business sector guys go borrow at ridiculous rate, sometimes as much as 20%. I'm not saying per annum right now, 20% flat a month. That's high. That's certainly going to, I mean, if Chinedu, for example, borrows at 20%, he's going to have to spread that on whoever's coming to buy. So we need to keep the interest rate at reasonable and competitive level, such that it won't further drive up inflation. We have a lot of stuff going on right now. We don't want to further drive up inflation, but we need to make the MFIs do their bit.
And when we look at regulation, definitely we'll see this segment is also regulated. How do you think the regulation currently in Nigeria, how do you think that's playing into how the MFIs operate? Because,
you see, we're beginning to regulate MFIs like they are conventional banks or commercial banks. They can't play by the same set of rules. So MFIs are basically supposed to be like your local government, okay? And we should not have too much expectations. The people that they lend to are not large corporations. It is with large corporations that you would be looking for collateral, you would be looking for financials and checking their statements. These guys don't have financials. They don't have statements. So you cannot, the rules that govern, the regulations and policies that govern commercial banks cannot be the same set of rules that govern microfinance institutions. Microfinance institutions, as far as I'm concerned, should operate, like I said, as they should check for what these guys are doing and understand their accountability structure first. And whatever set of rules we're going to be putting in place for them should be trust-based, such that you can get them in that community or wherever you're dealing with. If you're dealing with them in like a market system, you should get them to guarantee one another, to say, I know Chinedu. Chinedu knows Godwin. Godwin is going to guarantee Chinedu. Chinedu is going to guarantee Godwin. That tells you that there can be peer pressure if they don't pay. to say that if this guy don't pay, you easily can go to Chinedu and say, Chinedu, Gordon isn't paying he's not paying his credit that was availed to him. And then he gets, somehow makes him to pay. That is the kind of accountability structure we should be looking at. Really
so it's possible that trust is not a risk in that segment?
It is a risk, but it's a risk that can be mitigated because these guys know themselves all too well. They've been in the same community for decades sometimes. Do you understand? So, and let's look at it from where this all started, or from like the Grameen Bank. It's all trust-based. This group of women, they know themselves. They don't need collateral, and in some cases, in most cases, they don't need savings. You know, because if you're telling someone, come bring savings, bring your own share, you know, because what we're trying to do most times is to say that you bring your savings before you can get collateral. Are we doing income redistribution here? These people don't have these funds, and that's why they're coming to come and borrow in the first place. So we shouldn't set rules and regulation that would make them be the underserved that they already are, or further deepen that kind of name that we have decided to give to them.
Okay, so you know, looking at the MFIs at this point, what kind of innovation or trends are you seeing in 2025 so far, or do you expect to see, you know, going forward?
Well, the innovation I will expect to see, I'm not a fan of. See, innovation is good, especially when it comes to technology, but I still maintain that if we want to see MFIs lend to businesses, we should be talking about having boots on the ground. These are people that microfinance institutions should be able to put boots on the ground for people for them to be able to understand the accountability structure of these informal sectors. And it's only then can you be innovative when it comes to your pricing. Can you be innovative when it comes to even the amount that you offer them? Because if you don't understand them, if you're looking at them acting like they're like large corporations, then that won't happen. What you need to do is to understand how they function. Only then can you be innovative in your lending, in what your requirements are going to be. Then, I mean, maybe when we have help with that economic mobility from micro to small and to large, we can start introducing some form of technology that will help them with their banking transaction, because most of these people we're talking about are actually not people who are learned.
Right, so definitely a lot to unpack there, and you know, definitely we're hoping for a time where we see the little guy who's getting as much credit, you know, as he needs to become the big guy, you know, at some point. That's what we're looking for. Thank you so much. It was great having this conversation with you. Mr. Sheyi Shagu, who's the CEO, Entourage Integrated Trust Limited, and finance expert. Thank you for coming on today.
Thank you so much. I appreciate it.